What's going on, everyone? My name is Nicholas Merton here at Dash, and today is August 19th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a wide range of topics to cover on the update. We're going to start off by taking a look at cryptocurrency markets, talking about the coiling of Bitcoin's price, looking for either a big breakout to the upside or downside over the next week. And along with that as well, taking a look at a very key indicator when it comes to traditional markets, and that is the global inversions of yield curves across different countries and how that can help us predict recessions. And last but not least, we are going to have a sponsored review of Metahash towards the end of the video, so I recommend you guys stay tuned for that as well. But we've got lots of things to discuss. Let's go ahead and take a look over cryptocurrency markets. So over the last 24 hours, not only is Bitcoin up, but most cryptocurrencies are in the green, slightly to the upside here, with a few exceptions down the red or neutral territory. Again, though, not many cryptos outpacing Bitcoin here. I mean, we have a few key players here on the top side here, such as Binance Coin, Bitcoin SV, a few others such as Ethereum as well, starting to outpace Bitcoin. But again, outside of a few altcoins like Chainlink and Base Contention Token, the ones that we've been watching in our top 10, again, most cryptocurrencies still getting outpaced by Bitcoin here. Again, a very key thing to keep in mind, guys. Again, I'm going to keep drilling this point. There are very few altcoins that are going to outpace Bitcoin in this next cycle. I really do believe that. We might get, some of the recovery of the huge sell-off we've seen in altcoins compared to Bitcoin, and the, reversal in this case when we start to shift into the altcoin cycle. But again, I don't think that every crypto is going to win in this regard. There's going to be some very key players that really come out. And you want to think about what are the cryptos, again, you don't want to try to pick cryptos that are 98, 99% down. Think about the cryptos that you believe are going to come out and be the next Ethereum, come out and be the next Litecoin in this case. Some of the players that really kind of rose from the ashes at the beginning of 2017 or even in 2016, which is kind of the equivalent of where we are now. We're still exiting out of the corrective period that we've had, and we're going to revisit back to all-time highs. And when we revisit those all-time highs, historically speaking, that is when we're most likely to see an altcoin cycle. So that's what we're preparing for. What do you think is going to start moving around then? I'd love to know down in the comments if you guys have some favorites that you think would do that. But let's go ahead here, take a look at overall market capitalization. We can see here again, higher lows from the previous low that we set back here in mid-July. Again, a month later here, setting a higher low in this case. Again, very good sign that we are going to continue moving higher, in my opinion. But again, we're not extremely confident of it just yet. We have to see a few things confirmed in the chart, which we'll take a look at in just a little bit when we take a look at Bitcoin's chart, because we know that Bitcoin will likely lead this. Now, the one thing that I like in the sense of altcoins here is Bitcoin dominance setting on a lower high here. And I'm curious to see what this is going to do over the next few days. If we break down past the low over here, I think that's going to be a really good sign that we might get an early altcoin cycle and start seeing some risk taking around these levels. But I think that's only going to come in with a continuation in Bitcoin, which is usually kind of contrary to what we usually have. We usually see an outflow of liquidity out of Bitcoin, but I think Bitcoin has to continue climbing here up to 20K, and we're going to get that continued FOMO that we saw last time, where altcoins will start to follow in, Bitcoin starts losing dominance, and then it really starts to kick in for altcoins when Bitcoin retraces at 20K. It probably sees about anywhere from a 15 to 20% correction before it continues back upwards to 20K and to higher levels. That's kind of what I see happening here over the next 2 months. But we'll have to see how fast things move, if we can really get out of some key technical resistance that we're in right now. Now, you all know I love when Bitcoin's price coils. I love wedges. It's very common for Bitcoin to go through wedges. We've seen it historically in the previous cycle multiple times. And it's a very nice thing about Bitcoin is that Bitcoin starts to move in these 4-year trends that, again, if you guys have looked at the longer term picture, Bitcoin's chart is not so much predictable in nature, but it is very easy to understand what phase of the cycle you're in. After the 80% retracements, you then have the accumulation period that goes back to the all-time highs, and then you have the continuation for the next few years to all new highs in a very parabolic cycle. Well, I think we're seeing the exact same thing here. We're getting the exit out of that accumulation phase, and we're starting to revisit back to the all-time highs at 20K. And right now, we're only at 10,600. And we can see that if we take a look here at this chart that we've had drawn on here since back here in mid-July, the Fibonacci fan, this line of resistance, we're seeing that resistance is still weighing in on Bitcoin's highs. We're setting lower highs here each time. But along with that, we're setting higher lows. And that's coming off of support of the Fibonacci fan as well as the 100-day moving average. So now we're really coiling in on price here. There's not much of a range here in the sense of either price or dates here, really towards the end of August, that we can expect Bitcoin to push sideways. It's going to have to pick direction and some time frame here soon. This is usually what happens on wedges. There is a possibility it could just push through sideways, but that commonly does not happen with wedges, guys. And I think that with the kind of momentum that we've had this year, I think it's likely that we break through to the upside. Now, what do I need to see in order to be confident of that? Well, it's a lot of the same indicators we talked about before in the past that we were watching for back here, and that is a cross on the MACD, a close above the 50 and the 21-day moving average, the blue and green lines here on my chart. And then also along with that as well, a nice breakout on volume. I want to get above this 15-day moving average for volume and really have a big green candle, similar to something like what we've seen over here, that really signals confidence and buyers coming in to set up the next trend here to continue price above 13,800 and really start charging up towards 20,000 here in the next few months. You know, we've gotten in July and August that nice sideways price action. We've taken a cool off, guys. I know some people have been like, when is it going to keep moving and stuff. Crypto markets have done a great recovery, guys. I think we should definitely be patient about it. But at the same time, these kind of 2 to 3 month, sideways price action moves are really good for Bitcoin in the longer term. I mean, I want to go ahead and just kind of, focus here in the sense of what we've been able to do in the cycle. We got 2 lows here on the 200 week. And we're able to, again, climb up and recover most of the losses. There's a very short period of time, guys, where you'd be down significantly on Bitcoin. And it's really up here at the peak of the cycle. So if you guys have been holding, if you've been focusing long term, I think what we're doing is we're prepping up for the next cycle. We're really getting ready to move up higher. And we can see here as well, this kind of sideways price action lets us solidify support at 10,000, which is very significant. To be able to hold an even level like that, I think is very, very important. I think people don't really admire the significance that we've been able to get past 6K, which again, so many of us thought a while back was going to be serious resistance, and we kept charging to higher and higher levels, and we've been able to hold here. Every time we dip below 5 digits, people come in and buy, and price gets back up very quickly. So it goes to show us, again, there are buyers in this market. Now, why is it that we're seeing buyers in this market, that we're seeing people so eager to buy something that's more than 3x off of its lows, even at this corrective price? Well, I think it's what's going on in traditional markets, guys. I think there's a problem that I think that over the past week or two, people have been expecting Bitcoin to just go parabolic to 20K because of all the things that have been going on in the macro environment. As Bitcoin was ahead of everything, it is absolutely charged through on this rally, in this case this year, exiting out of the accumulation phase. I think we're getting a little bit too greedy if we think that Bitcoin has performed well when it's the best performing asset out of any major financial asset in the world. Gold, silver, the hedging assets that have been doing great, still nowhere near what Bitcoin's been able to do. If you've been in Bitcoin, you've been winning more than anyone. Now, I want to talk a little bit about traditional markets here. And again, we want to focus, if you guys are like me, I don't want to tell you guys what to do. If you're a macro investor like me, you think about what is the best place to park my capital over the next few months, to the next year, possibly next 2 years. If there's no extremely exciting opportunities that you have to basket through and decide on, what's the key thing you want to have your capital in? Well, I know that in my mindset, I'm in hedging assets right now. And this is an indicator that really fuels my ambition for being in hedging positions right now. So this is on LMTR. You guys know we like to look over their charts when they come out from time to time. Back a few days ago, they came out with a really interesting chart that showed that the inversion of yield curves across the world are starting to pick up. And this is not just in the United States that you've probably heard about in the sense of the recent news headlines, but this is going on across so many different regions of the world. We're actually seeing the majority of the world's major governments now currently seeing an inversion of their major yield curves. So why is this significant? Well, if you look at it and you look at the dates associated with spikes in the inversion of yield curves globally across different countries, we can see that it gives us a very clear signal that either a recession was legitimately right around the corner or no more than a year out in this case. If we take a look here, 2006, housing market starts to top out. In this case as well, inversion of the yield curve starts coming in, and then we have in 2007, 2008 the start off of the sell-off in equities, going into the bottom of 2009. Here, the dot-com bubble, right at the turn of the 21st century, year 2000. yield curve spikes up. 90% of countries having an inverted yield curve with the short-term interest rates on treasuries being high, the short-term yields on interest rates on government treasuries doing better than the longer-term treasuries. So this is a very significant chart here. It's a very simple indicator. And these are the things that I like, guys, because it lets me know, historically speaking, I don't care what happens next week. A lot of people actually front run. This is a problem. And I saw someone actually have all places. I don't even like Reddit that much. Someone on Reddit on r/investing put it perfectly. So many people are going to read the articles this week that the yield curve is inverted. I've had a lot of friends contact me, a lot of fans of the channel, and they're like, Nick, oh my God, is it recession time? Because they see the headlines. And I don't believe the market's going to crash next week. No, I think there's a really good chance that equities are going to keep climbing a little bit higher and the market's going to hold out. And then 2 to 3 weeks down the line, people are going to forget that article. They're going to forget all the hubba around the inverted yield curve. And they're not going to realize that the inverted yield curve, globally speaking, as an indicator, is a premature indicator. It's an indicator that, hey, 6 to 12 months out, we're likely going to be in recession. Like, we're going to start seeing a pullback in stocks. And some people are going to, completely get sidelined by it, So again, the news is very quick to jump on these things, guys. But we should prepare in this case. We should start to, again, even if you're not going to, for example, sell your positions in stocks, what I would do if I had exposure to stocks is I'd slowly start entering into hedging positions. I'd start to slowly maneuver as the momentum dies off. And equities have been doing that for the last 2 years, right? Unless you're talking about like the NASDAQ, most major indices have just pushed sideways since their January 2018 high. There's been nothing exciting going on. Whereas in crypto markets during that same time, we have just been killing it in this case. So again, very important thing to note. All right. So here's just to show you guys, if you guys want to take a look at a little bit of focus on the chart here. So taking a look at equities. Again, speaking of my point here, we're really building up a gigantic ascending wedge here. And as much as an ascending wedge might sound bullish, it is a bearish indicator. You have rising highs and rising lows, which again might sound good, but it's when you have rising lows at a faster pace than your rising highs here. It shows that the resistance is getting hit at a very similar range, and it's not being able to make those new leaps. And the buyers are expecting that we can break through it. It's like, come on, we're buying these dips. It's basically expecting that we'd be able to hopefully set higher levels in the sense of resistance, because the benefit for buyers in this case is decaying in this case over time. New buyers coming at these dips. So that's what I think is kind of the philosophy behind the technical analysis in this indicator of an ascending wedge. But again, overall, guys, I'm waiting for this to showcase what it's going to do. We've talked about NASDAQ 10,000. We've talked about the indices continuing to rally in the United States. It's one of the few equity markets I even consider putting my money in at this point. And it's just because there's been a lot of demand for U.S. equity. It's been one of the best performing markets over the last decade. And I think people want to get in and continue to ride that wave. And they'll be willing to take that ride because they're mitigating the risk from all the other equities in the world. I'll tell you the one thing, guys, that makes me more concerned out of anything. Go ahead and turn off the indicators here. You can see the line of resistance that I kind of highlighted. Russell 2000. This looks like this is about ready to fall off a cliff. Seriously, guys. This is one of the most concerning charts. So to let you know, this is the small cap index. It measures 2,000 small cap companies. Small caps should be outperforming the market if we're taking on risk, if we're getting excited for more highs in equities. This to me looks like we need another rollover like we've had, really 3 times previously since we've exited out of 2009 in the sense of the lows in the market. And I think we're going to roll over somewhere down here towards, back down to triple-digit territory. I really do believe that if we start to really get a serious correction in equities. And that's where I'll start to get really excited about buying some, because that gets close down here to around the resistance back in 2007, here in 2011, and even comes down to a support range down here around 900 and might turn this into support. I think that would be an awesome 50% retracement down here. for us to possibly look at some potential value add. And there's a lot of great small cap companies. Small caps are usually what you want to bet on during a bull market. Small to mid caps are usually my favorites. But anyways, that's it for the video, guys. Again, we're going to be keeping an eye on what the central banks are going to be doing. We're going to be watching all kinds of different factors. But let's go ahead and jump right into our review of Metahash. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Metahash. Now, before we dive into the details of the project, I want to go ahead and give you a quick rundown as to what Metahash is all about. Simply put, Metahash is a public blockchain that aims to provide developers the tools in order to build decentralized applications, or dApps, in order to extract utility from the public ledger that has a lot of high throughput. Now, if we take a look through the details as we will, through the white paper and through the wallet itself, we're going to get a good image as to what Metahash is aiming to do and where it's at the moment from the time that it's been around. But I want to go ahead and give you a quick rundown into some further details. And you can see a lot right here on the front page of the website. They're trying to be a next generation blockchain, a competing protocol with many of the players that are out there in the space right now. And like most protocols, they're trying to solve the blockchain dilemma. It's a sacrifice of usually one of three principles, and their objective is to not have to sacrifice one of those three things, such as fast throughput, security, or decentralization. Well, on Metahash, they claim to have been able to complete all three of these things. For example, you can see that they validate transactions in under 3 seconds and that they can have a throughput of 50,000 transactions per second. Now, the way that you're able to do this on a network is through not only its consensus mechanism, multi-POS, so proof-of-stake mechanisms are usually much more scalable in the sense of the transactions they can conduct because they're a lot less resource intensive. But along with that as well, it's a horizontally scalable network. Most networks will not be able to reach this kind of throughput unless they horizontally scale, and that really depends on how the network reaches consensus, and it usually doesn't involve all participants reaching consensus. And the third part factor as well here is the fact that it's decentralized, so anyone can participate. It's public. So in this case, this is how Metahash aims to complete its objective of building a high throughput blockchain. And we're going to learn throughout the video in this case, as we go through the white paper and a few other details, really how it does this, and also some of the ways that Metahash tries to seem as attractive compared to a lot of other public ledgers. So let's go ahead here and we'll dive through the white paper. So again, a lot of big bold claims here, being able to do 5 billion transactions per day, and I guess they get that from their 5,000 TPS per second measure. I'm not 100% sure about this, guys, not to mention if a blockchain really needs that throughput just yet. I don't think we're at that phase yet. But again, I do believe that this could probably produce much more throughput compared to other public blockchains. It's more of a test of whether or not multi-POS is secure in this case. And I think it has to do with a certain amount of the nodes in this case, corrupting the network in this case. But you obviously have the stake mechanism that keeps people in line. So we've seen POS networks work well. I don't really have much of a fear around that. So there's a few different components here that we're going to talk about. We're going to be talking about Meta Apps and Metagate later on. We'll take a look at their wallet, which is Metagate. But again, it's to aim at building a decentralized network that's highly scalable, that allows you to generate digital assets and decentralized applications in this case. So again, very similar objectives to many different blockchains. There's not much of a need to dive too much into the differences there and their objectives. They're very shared with most public blockchains. So what are some of the issues that Metahash aims to try and solve? Well, obviously the number of transactions is a problem, in the sense of scalability. We're seeing high fees on a lot of public blockchains, the ability to send transactions free of charge in most cases. People don't like fees. Especially the user in this case, if they're paying for something. Transition from proof of work mining to multi-POS. So obviously proof of work takes a lot of computational resources. They want to protect the network from a money attack, which is basically people spending a lot of money to get basically mining equipment, in this case to attack a network. The increase of the speed of transaction approval. So obviously settling transactions much quicker than, say, 10 minutes or even a few seconds on the Ethereum network. And then implementing the built-in mechanism of tokenization of any asset, so to be able to tokenize assets. So they not only are able to tokenize assets, confirm transactions very quickly. The fact is as well, in the case of fighting a money attack, you can only basically attack the network if you get over 2/3 in this case. But they even claim here, in most proof of stake cases in this case, you need a certain amount of nodes in this case to attack the network, but they actually have additional verification steps that will keep and prevent people from being able to corrupt the wallet. Again, if you want to dive into some of the intricacies as to how their network reaches security, I recommend you guys read further through the white paper. But again, these are kind of the major things here. They have the high throughput. You won't have to pay fees on all transactions on the network, and if you do have to pay fees, they're quite minimal, as I've taken a look through the wallet. So again,
Some pretty good little accolades here. Again, I think more than anything, I like to see these networks come alive, and I like to see them real time. And what's nice is I have to say probably my favorite thing about Metahash, being someone who's kind of a bug for good UI design and user experience, is their wallet in this case. Now, I haven't looked at their mobile wallet. I obviously don't want to own an Android phone in this case. I'm an iOS user. However, I have used their desktop wallet, and I've got it open up here. So we're going to take a quick look through. As you can see, I'm already logged into my account here. Now, there's a few things I take away. Some positive notes is obviously the wallet is very functionable in the sense that it has everything in one place. A lot of wallets for networks still don't have this. Some of the big protocols don't. And not to mention as well, the user experience, again, very clean. It's very easy to just set up a wallet very quickly. You can see the price of Metahash, and you can also store your other cryptocurrencies such as Bitcoin and Ethereum. But as much as I like the user experience and everything, it really comes into play when you've got the apps here at your disposal. I think that's what's most important. And if we take a look through here, everything looks quite clean. For example, meta forging. This is one of the important things that I think is important for most if you might be interested in Metahash, and that is those of you who like to stake. So if you're used to proof-of-stake networks, you'll be used to metagate forging in this case. You basically select your wallet, and you can start basically earning in that case by holding your Metahash. Now, along with that as well, there's server forging. In this case, you can provide computational resources, earn extra Metahash by facilitating services for other people across the network. So I like anything like this, decentralized computational services. It's kind of down my alley. And you can also do coin delegation in this case. So again, another form in this case of forging. Now, if we go back here as well, and I don't really understand some of those kind of things, you can get your news from Metahash here. Again, another nice function here in the wallet, all their recent updates and blog posts. The major thing to take away, though, is that obviously you can see the apps here. Now, of course, they have a dev portal, but the major thing is as we scroll down, again, the applications that are available. My one criticism is that right now, I mean, I don't know if they don't have a solid filtering mechanism or not, or if, it's just so early on that they're allowing most applications to get out there. And then again, it's decentralized, so people should be able to post what they want. But I have to say there's not too many solid applications. I looked through a few of them. Some just lead to websites, things of that sort. So I think there needs to be more development on the platform. I don't know if there's actually any blockage of per se like a range of languages you can use to program. It's again, that's just not my expertise. I'm just not a developer in that case. But I will say here, though, I want to see more applications before I get, per se bullish or excited about Metahash. But again, I think they've got the framework here. If you get a few killer apps built in this case, you've got it all in the wallet. It's very functional. That's exactly how it should be. And again, a lot of protocols still don't get this, that if within the wallets, the major wallets for the network, if you're going to make a wallet for your network, to have that functionality. So props to Metahash for that. Now that we've taken a good look through the wallet here, there's an important thing to talk about as we were talking about forging and also server forging in this case where you're able to provide resources. There's a new type of node that you'll be able to run called an infrastructure torrent node. And this is very much down the same line in this case. You'll be able to basically store blocks and commit other types of work for enterprise grade clients and be able to earn Metahash through running one of these nodes. So again, if you want to learn a little bit more details about how to earn this and what are some of the requirements for it, they lay them out here in this article in the sense of the computational resources you need as well as the Metahash. And again, you guys can read through the details. I'll leave it linked down below in the description so you can learn a little bit more. Also, for those of you who are developers out there in the community, I know we've got some here in the Datahash community. If you want to learn more about what Metahash is capable of, and you want to learn if whether or not you feel kind of comfortable with adding and contributing to the ecosystem, feel free to read through their technical documentation, which I'll leave a link down below as well. Now, the one thing that I wanted to share with you all as well is that they have what's known as the MetaGather program. So this is a referral campaign that allows you to actually earn by bringing in new people into the Metahash community. And you can see the different reward payouts here. So if you win basically into the higher places, you're obviously going to get more. And these are at the current USD rates that are traded on the market right now for Metahash. So you get $68 in Metahash right here for the first reward at the current moment. So again, check that out if you guys are interested in the description. We'll leave that link down below if you guys want to participate in that. As we take a look here towards the fundamentals of the project, I like the ambitions of Metahash. I want to see more high throughput blockchains. I like as well that they're trying to solve the blockchain dilemma. I think that's a very humble and kind of important thing to fix in the blockchain space. And not to mention as well, they've started off by having a good wallet interface for both users and developers to interact with the network. But again, there's some very big challenges here, making sure that you can solve the blockchain dilemma by having the scalability but not sacrificing security or decentralization. And then along with that, attracting developers. There's a lot of competing protocols. So I'd say that those are my three concerns: the illiquidity in the exchanges, being able to really solve the blockchain dilemma, and then also being able to compete with the other protocols out there. Outside of that, though, I think the project looks quite interesting, and I will be keeping my eye on it over time as time progresses. But that being said, guys, thank you all so much for watching. If you guys like Metahash, leave a comment down below. If you got anything to contribute to the conversation once you do your review, let me know down below in the comments. And until the next video, I'll see you all in the next one. Stay tuned.